Greetings traders! In today's video, let's see one slightly more advanced trading indicator which is called Ichimoku Cloud. Now, I know it seems really confusing for beginner traders, and there is some truth to it because if you don't know how to look at it, it could sound really baffling and you wouldn't understand a thing how it works, so simply many traders just drop it. But it's unfortunate because it could show many great advantages to other indicators and it's worth to at least analyze it, let alone trade it, because if you trade correctly, it's really effective. So at the start, let's discuss indicator in itself and then let's see a couple of strategies how this indicator could be used properly. So let's start. Now, I would say that the best way how to start it would be to open it and to tell you a couple of nuances how it actually works. So now we have S&P 500 chart, and to say the least, it looks rather confusing, right? But I will explain you why it is so, because this is Ichimoku Cloud indicator without further context. So I will hide it for a minute and show you just simple chart, and then we will slowly start to look at the most important Ichimoku lines and how we actually could use it. So let's now open the settings and let's tell you briefly about how it looks. So effectively, it consists of 4 basic fundamentals, and I will call to you them in Japanese. First one is Tenkan-sen, which is, in other words, fast-moving average, which calls and shows short-term trends. Second one is Kijun-sen, or in other words, slower moving average. That's typically in the red line and it's usually lags the faster line. Third is Senko span A and B, or in other words, this is crossover of trend indicators which forms cloud, hence the name Ichimoku Cloud. And the fourth is Chiku span. Yes, the name is funny. These are Japanese names which I'm probably spelling out completely wrong, but nevertheless, this more or less shows larger term trend indicator. But now let's see how they look in practice. Okay, now we have opened the chart and now we see blank chart. So in the blank chart, we just open settings. Now the first one, or conversion line, this is the shorter term moving average. Second one indicator was the baseline or the longer term moving average. Excuse me for not showing the Japanese names because I simply cannot spell them. Now let's move on to third one, and this is Ichimoku Cloud. So this is the cloud. So this is a short-term moving average, longer-term moving average, and this one be the cloud, which is third indicator. Then we have fourth line, which was a longer-term trend indicator, and this is the fourth line. So once you see this is not that confusing anymore because here is the longer moving average, this is the shorter moving average, this is the cloud, and this is the baseline, which is even longer moving average, in other words. So now we see those 4 lines and see what they are actually kind of made of. Now we could actually see a couple of strategies how we could trade it. Now the very basis of Ichimoku trading could be trend trading strategy, where we simply are trading above the cloud. If prices are above the cloud, we have upwards trend, and if prices are below the cloud, we have downwards trend. To see that, I would show you just the cloud itself and you could see how it actually could be used. You see simply prices above the cloud and this is now below the cloud. This is simply really simple explanation how it works, and you could actually use it as a trend trading indicator, something similar as with moving averages or Bollinger Bands, but approach is more or less your preference. Prices are above Ichimoku Cloud, you are going long. Prices are below Ichimoku Cloud, you are going short. Simple as that. But now let's look on at the second strategy, and the second strategy is breakout strategy. In the breakout strategy, approach is kind of similar because we're also seeing price breakouts above the cloud or below the cloud, but here we have got that lagging baseline of the Ichimoku. I hope I correctly pronounced the baseline because those Japanese words confuse me as hell. I also constantly misuse the words, but so this is the base long-term moving average, which was fourth indicator. So I would rephrase it. Once prices are above Ichimoku Cloud and that long-term fourth indicator, that means we could have huge price breakout. Now usually that doesn't happen that often, and it's more or less strategy when I have extreme price moves. We could still use it in the ways like that. I personally use it more or less for analysis, not a trading tool, because that would indicate me that there is extreme price movement in either direction. So for me, the second breakout option is more analytical option, but if you are trading for really short time frames, you could use it as a breakout tool. Or in other words, prices are above or below Ichimoku Cloud and baseline, you could trade it. But now let's go on to third trading strategy. For third strategy, you also should slightly configure Ichimoku so you could actually see what I'm doing. And here the simple thing is to see crossovers between slower and faster trend indicators. So if, in other words, prices are above averages and they are crossing over when shorter term average and or trend indicator, name it as you like it, because I simply cannot talk about them in Japanese because I know I would spell them wrongly. Excuse me for that. But in other words, okay, let's rephrase it. Once the shorter term indicator are crossing lower term indicator upwards, we have bullish indicator. And once they are doing opposite direction here, when we have shorter term indicator below longer term indicator, we could go bearish or bet on the price call. So this is simple crossover strategy where you could simply, you see here, prices are below averages, shorter term indicator crossed longer term indicator, we could go short and we had nice little profit here. And in other direction here, prices are below indicators, shorter term indicator is above longer term indicator, we could go long here and here. So nice little profits here. This actually approach works pretty good if you are a short-term trader and if you want to hold your trades for shorter time periods. Here's something I have to add, something important. If you want to trade Ichimoku Cloud, you have to see more analysis of this approach because as you see, it could be really tricky for beginners. And for that, I suggest you to go to my Telegram channel because there you'll be seeing how it's done through various time frames and various markets because their application slightly changes when you are looking at different time frames and different markets. So it's important you see lots of examples how it's done professionally. So join my Telegram channel to see more advanced analysis and ways how you could trade with Ichimoku Cloud. It's free, it costs you nothing, and you had everything to gain there. So let's meet there. But now let's continue this video. Now, it's important, as with any trend indicator, to understand that risk management is extremely important here. You simply cannot trade if prices are above Ichimoku Cloud or above the short and long-term indicator crossover. It simply wouldn't work because, well, you could blow off your capital in one wrong trade. So you have to utilize it as also as a risk management tool, and you have to see how prices react once prices are reverting to previous direction. Once you see these Ichimoku line crossovers doesn't work and they are reverting to previous levels, or Ichimoku Clouds are not performing, prices are not going above Ichimoku Clouds and they are standing in between or actually falling. If you are going well, close it immediately because you are not going in the direction of trend if you are not using this correctly. So here risk management is foundation of everything, as with other trading strategies. Do not think they are magic. Without proper risk management, they won't work as well. So remember, risk management is key for traders, not indicators, because you could use many trading indicators and they could work if your risk management is correct. But if your risk management is wrong, the best application tools for Ichimoku Cloud wouldn't stand a chance. Remember that. But now, let's conclude. Now, what we could say about Ichimoku? For me, subjectively, I could split it into several parts. Like, I wouldn't trade it with all of the indicators up it because it's really confusing. For me, this is not the way to trade because I don't understand anything. For me to trade Ichimoku Cloud, it would be two scenarios. Either I am trading with Ichimoku Cloud, as you are seeing now, we have Ichimoku Cloud, and as I am seeing it as a trend indicator. If prices are above Ichimoku Cloud, I could go long. If they are below, I could go short. Or as a second option, I could see it as shorter term trading indicator when prices are above indicator crossover or they are below. So we see prices are above crossover and shorter term indicator is above longer term indicator, or we are going short when prices are below indicator and shorter term indicator is below longer term indicator. I'm calling these indicators because I cannot spell those Japanese words. So as a trading tool, I only use it for these two strategies, and I am showing these strategies only with those indicators, and I am shadowing other indicators because other than that, that might confuse me. And the third option is to simply see Ichimoku Cloud and long-term lagging indicator to see whether we have huge price breaks. We could have huge price breaks if prices are going to extremes and we have prices which are above cloud and above larger lagging indicator or below it. That's for me is more like analytical tool. I don't trade it because trading opportunities are too rare for my trading strategies, but you could fit it as you like. And this is the good thing about Ichimoku strategy. If you dissect it and if you split it into parts, the one indicator could make several good trading strategies. And this is the advantage of it. This is why it's slightly more advanced and it might be slightly more confusing. But if you use it for each of its points correctly, it's great. So this is what I suggest. Do not be afraid of its name or those complicated Japanese abbreviations. I don't know them either, and I don't actually use them. As you saw, I just called it as a longer or shorter term indicators because I cannot spell those Japanese words. But if you split like that, it works. So this was the way how to use it. Actually, if you want to trade it even better, join my Telegram channel, because there you will get trading signals with Ichimoku strategies and you will see how that performs and makes you money in practice. So watch my other videos about trading and join me on my Telegram channel. Stay tuned.